Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so we'll spend a little bit of time on the daily chart, but then I want to talk about the hourly chart. We talked a lot yesterday about how the tape was slowing down for the holidays, and sometimes I hate it when I'm right, but the vast majority of yesterday was about bumping up into the 2267 half area, and then bumping into 65 half to 65.75, and really not being able to go any deeper than 63. We spent the majority of the day in a 5-handle range. We spent the majority of the midday to the early part of the afternoon in a 2-handle range. So this is nothing unusual for the time of year. It's something that if you're a trader, you just have to accept. If that means that you have to shorten up your time frames a little bit to get done what you need to get done, you do that. You can't. Once you as a trader understand that you can't control the tape, your life gets a lot easier. Now, late in the day, the bears were able to use all the resistance they had built up over the last couple of sessions, 67.5 to 65s, to make a push down into the low 60s. You can see here we closed ultimately on the day down 58 on the cash close, knocked around a little bit here, but you can see the weekly pivot down here at 2256.60. We were actually able to give that a test. So you could see the Bollinger Bands and the hourly were becoming compressed. And you can have compression and expansion in bands on any time frame. I usually talk about the daily time frame just because for the purposes of this webcast, I take a little bit of a longer view. For purposes of the hourly chart, and we use the 5-minute bands in our trading in the room every day. What you saw here was your classic compression building up over the course of time, creating resistance at the mid-band, and then finally, just when you think it'll never fall out of bed, that's exactly what it does. So we tested weekly pivot, we traded back up to the mid-band on the hourly chart, which proved to be resistance. So for the bulls today, they're going to have to get over the mid-band on the hourly chart. Right now it's about 59.5 if they're going to head anywhere today. If they are, then you could get a retest of yesterday's highs. If the bears really start to drop the ball, then they'll get above 67.5 and trade back up to 73. Now, if the bears are for real, what you see today is you see a conversion of the weekly pivot to resistance, and that would open up a move down to 2247 to test this low, and ideally to test the 43 move from December the 14th. So you still have the same range. It's 47 to 67.5. We spent a couple of days trying to get over the top of the range unsuccessfully, and the bulls are paying the price for that with a move back down to weekly pivot. Okay, that's all I've got. Everybody have a fantastic day. Follow us on Twitter at Princetontrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.